In August of 2019, Charles Schwab shocked the investing world when they announced that they were going to be supporting free trades on their online platform. Only a few hours later, one of the other giants in the industry, TD Ameritrade, followed suit, and then the dominoes fell throughout the industry. Days later, E-Trade did, and now almost every key player is supporting free trades in the investing platform industry. This was caused by a trend of well-known free trading platforms, including Robinhood, Webull, Acorns, and M1 Finance. The question is, how do these stack up now that all the more established, well-known investment platforms are supporting free trades? In this video, I'm going to be taking a look at M1 Finance specifically and talking through who they are, some of the pros and cons of the investment platform, and what kind of investor does this investment platform make sense for in 2020. Before we jump into the content of this video, I just want to mention that over the last week, we are up over 100 subscribers on this channel. And so to all the new people here for the first time, welcome to the channel. This isn't one of the typical videos that I have on my channel. However, I think it's timely because of the current promotion that they're doing, and it kind of sets the stage for why I invest the way I do on my platform. At this current rate of 100 new subscribers every single week, we're going to destroy our goal of 2,000 subscribers by the end of the year. So if we keep that up, that would be awesome. So if you guys like the video, and then subscribe to the channel so you can be part of that train moving forward. Now to set the stage, the reason I'm talking about M1 Finance is because they are the broker that I use for my dividend portfolio. That's the portfolio that you guys see every single month with my dividend portfolio updates. I've been using these guys for the last 8 months on this channel, and I have a playlist of all my dividend portfolio updates that you guys can go back and see how my portfolio has changed over time and how M1 displays all those changes over time. M1 Finance is home to over 150,000 individual investors, and just recently, they surpassed $2 billion of assets under management. That means that all of those investors, in total, have $2 billion that M1 Finance is the platform for on their trades. Currently, because of this milestone that they just surpassed of $2 billion, in the month of September, M1 Finance is offering a $20 sign-up bonus if you fund your account within 30 days of signing up. So I think if you guys are going to jump on the M1 bandwagon, now is as good a time as it's going to be. All you have to do is sign up for an account and fund the account, which means you put $100 in if it's a non-retirement account, or $500 if it is for retirement. Now this isn't a sponsored video, but if you guys do click the link that I use in the description below, I'll get the same referral fee that you guys will get when you open up the account. I have been using this platform for the last 8 months, like I said, and I'm a huge fan of the way that they have things set up, and I'm sure that's reflected throughout this video when I talk about the pros and cons. So if you guys do want to sign up, I would appreciate you guys using the link in the description because it'll really help out the channel. Now let's talk about some of the pros and cons of the investing platform because it's really not for everyone. There are specific pros and cons that as an investor you need to be aware of before choosing a broker, especially M1 Finance, because they're not what I would call a typical investment platform. I think one of the large pros is they have a very simple and intuitive interface on their website and on their app. The first thing you see when you log into the app is your current allocation. This shows your pies that you have. For example, in my portfolio, I have 25% of the money in the portfolio allocated to real estate. This is shown clearly and promptly on the first screen. It shows you the amount that you have in your account, what your return on it is, and if you're under or overweight on those current allocations. There's a lot to using M1 Finance that's different from other investment brokerages, but I'll add a link to a good demo provided by M1 Finance on how to use the platform and set up your portfolio. Another pro is there are no fees that come with M1 Finance. As I mentioned earlier, they were one of the key brokerages that kind of spurred the change to no transaction fees. But as some investment advisors or other mutual funds do, they don't have any assets under management fees at all. They also don't have any transaction fees. The only fees that you're going to pay if you use M1 Finance are those that are tied directly to the ETFs if you do invest in those. For example, some Vanguard funds, they're going to charge you 0.04% of your money for actively managing some of their portfolios. But unlike other platforms, M1 Finance is not going to add an additional management fee on top of that. So it's really the lowest fee structure that you're going to get. Another pro is automatic investing or rebalancing of your portfolio. M1 Finance automatically invests every single dollar that you have based on your allocation once you get a cash balance of at least $10. Since it's based on a desired allocation, it'll automatically have an investment bias towards investing in those that had short-term poor performance. So let's say over the past week, maybe financials kind of fell 2%. When you invest money into that portfolio, your financials are going to be underweight. Therefore, it's going to invest more into your financials industry than it would others. That way, you're almost continuously buying dips whenever they happen in the market, but you're buying them in each industry when those dips occur. Another pro is you have self-directed investments. You can choose your own allocation. So for me, I have mine allocated by industry, and then within each industry, I have individual stocks. Or you can use their existing expert pies, or change those slightly to fit your needs. Another big pro is they do support fractional shares. You can invest in companies like Amazon or Google, which both have share prices well over $1,000, even if you only have a couple $100s to invest. And it also allows for small investors, like those who have under $1,000, to be properly diversified. Because even if you have $1,000 and you want 20 companies, you can only invest in companies that have share prices under 50, which isn't the case for all good companies. Now there are a good amount of cons that come with M1 Finance as well. Without paying for an additional service, transactions occur only one time per day, and it's right about when the market opens. So, if a stock falls like 15% in one day, you can't buy the stock at current prices. You'll have to put in a trade order right now, but the trade won't be executed until tomorrow morning when the stock market opens. It's the same thing if your stock jumps 15% in one day. You'll have to wait until tomorrow to sell that stock. Another con that comes with using M1 Finance as your investment platform, there is very limited to no goal setting or guidance given from the platform itself on how you should be managing your personal finances. They don't have any financial advisors on their payroll for you to call or use them for additional services to assist with goal setting or retirement planning. Unlike some other brokerages, like Fidelity for example, they give you a retirement score, which takes into consideration your current investment's worth, the aggressiveness of the way you invest those funds, and future contributions. They'll give you a likelihood that the money that you have right now and the money that you contribute in the future will be enough to retire on in your given time period. So M1 Finance does not have those features. So that makes you have to seek outside resources to get those same benefits. And last, which could be a deal breaker for a lot of investors, is they don't support tax loss harvesting. So for those who don't understand what that is, tax loss harvesting is the selling of bonds or stocks or other securities at a loss to offset other gains that you would have in other securities. The reason that people do this is if your tax losses offset your tax gains, you're not taxed on any of that money. And if you can offset any short-term capital gains, which is usually taxed at a higher percentage than long-term, with other short-term losses, that basically means your effective tax rate will decrease. Now this is not possible on M1 Finance. And in just a second I'm going to talk about who M1 Finance is good for and who it necessarily isn't for. And this will be a large part coming into it. So starting out, who is M1 Finance good for? Obviously, I use it, so I fit into at least one of these categories. The first category is new investors. And I think it comes down to a couple key factors. First, a lot of the investing process is automated and they don't overcomplicate it. On a lot of brokerages, they give you a lot of different buying options. But on M1 Finance, they really only give you the option to put in a market order. Plus, all the trades are automatically done based on your current allocations if you set it up that way. Second, the user interface is incredibly clean, and it's very simple to see where your money sits. And third, they really do give a lot of value through their expert pies. This isn't only applicable to new investors, but it can also serve as a lot of inspiration for some older, more experienced investors. M1 Finance is also very good for those who prefer to buy and hold, because they're not really going to be the ones who are impacted heavily by the loss of the tax loss harvesting ability. And for me, I use it because it's really good for dividend investors. It breaks down your gains on a month-to-month basis, or week-to-week, or even by day on your capital gains for the day, and it also gives you a return on all the dividends that you earned by holding those stocks on that specific day. And I think this is really cool to see, because even if your stock market prices keep falling, you can still see a gain from all your dividends that you continuously earn, and that helps you stick on that path. Now, M1 Finance is not good for active traders. This really comes down to two things. You're only able to place trades at one point in a day, and you have no say over at what point in the day that is. You have to set the sell or buy order the day before. This is very bad for active traders as they seek to optimize the trades throughout the day. Whereas for new investors, I think it's pretty nice to have it all simplified for you to get sucked into the get-rich-quick nature of trying to time the market throughout the day. Also, it's not good for active traders because a lot of their gains are short-term in nature. So the lack of the tax loss harvesting really will impact their marginal tax rate. M1 Finance also is not good for those who don't have an outside research source. A lot of brokerages, like Fidelity, which I use for my Roth IRA, they have built in a lot of research tools. But M1 Finance, they're very limited in the amount of data that they give you. So, if you are going to be doing research on a lot of these stocks, you're going to have to find outside sources. I use Seeking Alpha, I'll use all the 10Ks, the 10Qs from the companies, their quarterly earning calls, and I'll use other sources like Yahoo Finance. All of these together, I feel, give me enough information to make these decisions rationally and with a lot of thought put into them. But if you're an investor who only uses the platforms for research and trading, M1 Finance is probably not a good option for you. At this point, you've probably come to the decision whether M1 Finance is a good or bad option for you. If it's a bad option, hey, no harm, no foul. There are other great platforms out there, and as a user of another one, I can say that M1 Finance really isn't superior to the majority of people. It really is just tailored to a specific kind of investor, and the strategy that I use in my dividend portfolio just happens to align with that. If you do think they're a good option, as I mentioned, I do have a link below in which if you use my referral link and fund your account within 30 days, you and I will both get $20 to start your portfolio. So if you want to help out the channel and you think M1 Finance is a good option for you, go ahead and use that link below. With that said, guys, thank you for watching the video, and in a second, you will see one video specifically curated from YouTube for you and one of my video playlists. So make sure to click on one of those, subscribe to the channel so you don't miss any future content, and ring the bell button so you're notified whenever I post a new video. And I will see you guys in the next video.